Good morning. Muar-based furniture maker Poh Huat is on our radar as COVID continues to rear its ugly head in Vietnam. Public Invest, though, is still keeping its outperform call and RM2.20 target price, implying a substantial 65% upside. The Vietnamese government has implemented something called Directive 16 in 16 of its southern states, which means that all non-essential businesses have to shut to help with curbing the spread of COVID-19. Poh Huat is not spared, and its facilities in Binh Duong and Dong Nai are temporarily halted for at least 2 weeks. The good news is that none of its Vietnamese employees have tested positive for the virus. Public Invest says this will delay shipments to Poh Huat's customers without a doubt, but the company is already talking to its customers about rescheduling its delivery dates. The good news is that Poh Huat has a decent amount of ready inventory, and once the factories are back up and running, they can simply extend the shifts. Public Invest does seem to think that the most recent closure will only have a minimal impact on its earnings, but the research house does roughly estimate that for every 2 weeks of closure, it will impact Poh Huat's earnings by about 2%. Bursa marketplace data shows 2 buy recommendations on Poh Huat, and that gives an average target price of RM1.98. This is 65 cents more than its last close of RM1.33.